Hey, hello everyone. I'm Chris with Daily Wave Cafe. Let's jump and take a look at the markets. They have been opening the new weekend here with quite a bit of weakness, and we have taken the Friday's low, which does not bode well for for any continuation of this uptrend or of that Friday's reversal. We've spent now several times, several weeks trying to kind of bounce back from that 50-day moving average. Last Friday on the 7th, we were able to, after a pretty deep sell-off, we were able to close towards the top, and then we staged a 3-day rally that we lost at about 68.70. This is the place where we talked about if the bears have enough ammunition here, or if they want to prove that this is actually a longer term top, or at least a third wave top, then that's where they have to sell it. They did. They started to kind of have several days of selling. Then last Friday, again, we almost revisited the lows from the 7th, but then we closed upwards of 75% of this entire decline of this entire bar. But then today we went ahead and took the lows of that. So we're getting a lot of whipping action here as we're sitting near the top and near all-time highs, right? Because we're only what 4 maybe 5% of the high, so it's not we're not in any deep sell-off or any stretch. But the fact that we're getting a higher volatility in here, bigger ranges, and that the market is more whippy in here, this could be signaling that we could be looking at least at a temporary top, and we could be entering a period of a larger correction in here. So you know, I have a bit more confidence in placing a wave three back here, and now looking for a wave four to develop in the markets. The stop for that would be, or I would change my mind regarding that if we are to take about 68, 69, if the market is able to hold here, turn and overtake 68.70 and start to move, I would think that that this wave forward then has to wait a little bit, and we will continue to a wave three formation towards 7,000, 7,200, depending on kind of how this forms, because then this would be an impulse, and then you would have a corrective move, and then we will continue to go higher. So that would be kind of my my line in the sand for any kind of bearish positioning or any declining thoughts. If we do break 65.50, then yes, and depending on kind of how aggressive that happens, then this wave forward would be underway, and that can take several shapes. I mean, it could develop as a triangle, a complex, maybe even a larger ABC. So we'll see how that goes. But that's kind of what I'm thinking, because look, we're starting to kind of be below. This is the first week that the price section it's a bit stronger below that 50-day moving average. Now, mind you, we're just kind of at the beginning of this, and we gotta wait. But you know, by the time this week is over, I mean, you could be again above 67, 6,900, and you can have this kind of turn bluish. But the fact that we're so tight against it, tells me that there might be something else afoot. Now, the trend it's still fine. It hasn't really, it shows signs of deterioration here. It hasn't really broken down. The RSI is still sitting at 60. The trend line, this kind of flexible trend line, it's still supporting prices, but we're starting to kind of crack that, and that's look on the 50 on the daily time frame, we're at about a 40 RSI, which was the RSI back on the sell-off, and we're continuing to kind of pressure these levels. So I would watch this. Let me show you kind of how this looks a little bit of a larger time frame. So if it wants to be a triangle, you can start to have maybe like an A, B, and then a wave C in here. Then it can stop. And then it can go back up in three waves, and then that would be your A, that would be B, and then you go C, D, and E, and you can kind of go sideways like this for maybe until the end of the year in a kind of choppy, weepy manner, and just kind of frustrate a lot of traders before you break and you go up higher in wave five of this degree, and then you go up here like that, and then then you correct a little bit deeper. There's plenty of room for this fourth wave to correct. I mean, this one was pretty sharp. If this is a correct wave 2, then a wave 4 would be, if we're placing some fibs, 64.39. That would be kind of like a minimum requirement that you would need to come to, I guess. It doesn't have to, but that would be, kind of the first level. So 64.39, and then you would have like a 61.59 if it wants to be something that's more aggressive, right? So if it goes in something like an A, B, C, and then you go back up, and you can do some kind of a complex move in an X, and then another ABC, and then you can have like a deeper correction, still into the 38.2%. But compared with this wave 2, I guess this would be a little bit too bigger. So we don't want to give it too much. The other option is that that this wave 1, it's done. And the larger this becomes, the larger this decline becomes, if it does, the higher the chances that we're already in a wave 1 and we're looking for a deeper wave 2 correction or for something more serious. So that's just the idea, before, if that, then this, and it's a step-by-step process. We're not trying to come up with the craziest scenario. We're not trying to be make kind of wild claims in here or do anything that's extravagant or anything like that. We're just kind of following along with the basic steps. We're trying to give this market the benefit of the doubt that it can continue to move, being in an uptrend. We're watching the 50-day, because if it breaks below, a lot of institutions are going to start to lighten up on their positions. And we're trying to kind of match that with where we are in the wave sequence, and with the break of previous higher lows, and the first one would be this kind of 65.50, and then that would tell us that that very likely that this kind of higher trend is now in a corrective territory. So that's these are my thoughts in the S&P 500. I've been reducing exposure, and I'm trying to play defense, but also I'm watching to see if I'm wrong on that, and if things can turn, and kind of what would be my level that would kind of get me to kind of get back in, or to kind of press the acceleration on the long side. So that's just what's going on in the equity markets. Then on crypto, and when we take a look at Bitcoin, I mean, we've been following this decline, and I've been saying over and over that it kind of acts weak, and until a certain levels to the upside get taken out, there's no point to touch Bitcoin. There's no point to kind of get involved. There is a decent chance that this can continue lower, and if it does, it would go to the 61.8, which is 90,599. I think those levels were hit, if not very, very close to it, and that's would be kind of the first idea on a wave 2 decline. Now, just because this is here, and just because I place a wave 2 and a possible C wave, it doesn't mean that that is the correct approach, and it doesn't mean that one would have to take actions on this, right? You got to wait and see moves in the opposite direction, at least some kind of an impulse. There's several ways to kind of judge this. Previous swing highs. It's way too early to say that Bitcoin is reaching a low at these levels. It's not. It could work, but that's mostly a guess than having something that can back it up. And what's the best thing that can back up a claim or a call? It's the price action. If that turns and we're starting to see buyers and decent formations and some kind of an engulfing price action, some kind of a hammer, a decent move in the opposite direction, until that happens, break of a trend line, you're having, instead of kind of these lower highs, you're starting to move back higher, and you have a higher low, and so far there's no indication. And then if we take a look at the weeklies here on the candlestick time frame, I mean, we lost that 52-week moving average. That was kind of the guide that's been holding prices for months in here, and we managed to a couple of weeks ago to kind of close back above it just slightly, and we rallied from it, but we failed. The market, the sellers came up on that quick move, retested that breakdown zone, and then they send them lower. So it's very hard to argue with the fact that this is now completely lost, and it's very hard to take a stance of a bullish trend anymore, at least based on this. Now, if you're looking, at the larger swing low, this is this level in here, which is closer to 75. Until this gets taken down, the market is still on a higher high, higher low, higher high, higher low, higher high, higher low type of a move. When this breaks, then we know, that we have something bigger afoot. So this back here was the first signal. When you start to break below that 50-day moving average, then you break below the 200, right? Then you break below the 52-week or the 50-week, and you're starting to deteriorate. These are further confirmations that this fake breakup, it's in its full force, and the market continues in the opposite direction, continuing to provide pain for a lot of those that bought on this on this move in here, and then they did not listen to get out of the market when this rejection happened. And now here we are sitting at below 92,000. Now, the other option in here, if we're losing this kind of 61.8 and the market continues to deteriorate, there will be a larger attraction towards 76,000, 76.6, and that would be, in terms of this wave count, possible fourth wave low, which we will discuss if that happens. I mean, if I were to play some fibs just to see kind of where those sit, 4v3, so 38.2%, it would be at about 65,830. Those would be, that would be a big decline. I'm not saying, we're going there, but if we are to just kind of look at the fibs and at the, I'm not sure, I'm just thinking, I want to double check if that wave too low, it's secured in its proper place, and it's not throwing off that, it might have been. Yep. Give me a second here. Let me go back and see. Oh, it just kind of pushed it up with a couple of thousand, 67, 353. So anyhow, we have this kind of 85 now at about 23%. We have that 61.8. So there is a little bit of a cluster of a fib starting to kind of happen in here, but until price action confirms, and if we go to the daily time frame, you can see that it's hard to do anything when the candles look like this, right? There is no, the 20-day moving average, it's the shorter term, and this would be at the minimum, the first thing that I would like to see that the market would kind of take back, and that's sitting at about 103,900. This one sits at about 102, so you would have to get back at the minimum above 100,000 to, even dream of thinking that that you could have a low in place, or that the market is kind of starting to change its tone or anything like that. So for right now, it's again, we will be watching kind of what's going on at about a 61.8, just from a pure price action perspective, just to kind of see how we react in here. It's possible that you could bounce from here just a little bit because it's an important fib, but how long and how far, and if it's going to be sustained, that's the market's guess. We'll see. So it's interesting to see how Bitcoin actually kind of sold off before the equity markets, almost like it was the leading indicator, and now we're waiting to see if the equities will follow through, if Bitcoin will turn before the equities, or kind of what's going on. I know November and December, they're supposed to be decent months, but so far it hasn't happened, and we got to listen to the price, and the price is telling us kind of stay back and don't get too aggressive with the prices acting the way they are, both in the equities and in crypto. So until better news come up, we'll continue to watch, and you can see us on Discord, Twitter, and here on YouTube. Thanks for watching. I'll see everybody tomorrow. Bye bye.